Welcome back to the program. It is Capital Markets live on Channels Television, and we've been looking at the raft of commercial papers we're now seeing on the FMDQ OTC Securities Exchange. That's been the focal point of our conversation this evening, using the case and time of Wema Bank, which just obtained approval for its notes. And Mr. Kayode Bakare, the treasurer at Wema Bank PLC, has been helping us to understand this trend. Mr. Kayode, give us the details of these commercial papers.
Like I said earlier, largely, Wema Bank were pleased to launch our 25 billion commercial paper as part of the 50 billion program as approved by FMDQ OTC. The reason why we're doing this is to explore the innovative financing options to consistently drive value and growth for our stakeholders.
Okay.
The series are in two tranches. We're doing 182 days and 270 days. We're launching all things being equal. We hope to open the offer on the 25th of this month, which is Monday, in 2 weeks' time, and the offer will close on the 29th. In terms of yield, like I explained earlier, for the 182, we're benchmarking similar tenor treasury bills of the federal government of Nigeria, and we're saying we're willing to pay additional 150 basis points over and above the stock rates. So that's what we're doing.
So walk us through your medium to long-term strategy. I want to believe this CP is part of it.
Yeah. Initially, what we intend to do was to key in, sometimes last year, we came to the market to raise bonds, 7 years bond.
Yeah. We thought, I was going to say that it's got a dual listing on FMDQ as well as the
exactly, and it's been traded. We thought we we're going to do the same thing this year, but we take a hard look within the bank to say, okay, where do we see interest rates? And with the opinion by Q1, Q2 next year, interest rates should soften. As a result, we started to suspend that program and say, okay, well, let's go for the short-term financing. Hoping that within 9 months, 6 months, 9 months, we should be able to pay back and probably come back to a market run rate bit slightly desirable in line with our capital management strategy.
Everyone knows the kind of headwinds that the banking sector has been going through in recent times. I know at the point when you came up with Alert, which is basically all over the place, your MD talked about a 40% cost-to-income ratio by the year 2020. Is that still in the offing?
Yeah, it's still. Year in, year out, we keep cutting costs. If you look at the metrics of the metrics in of the bank's balance sheet, year in, year out, we keep a lead on cost. It's quite challenging. What we intend to do from this CP also is to ramp up the figure in terms of our earnings, and that will help largely. We also mentioned Alert. What Alert is meant is a fully digital first in the history of this country, meant to drive, to put the bank, as it were, on your palm.
And that's one of the reasons why people talked about the fact that banks are beginning to cut down their numbers of branches. You're beginning to go digital.
Absolutely, because some banks have about 8,000 branch network. In these days, you can't compete with them, but you can use technology as a lever to catch up, to drive the growth. And that's what Alert is meant to do for the institution. And we've seen traction on daily basis. I mean, on daily basis, over 8,000 accounts have been opened. So in terms of volume, you can also see traction in terms of volume from Alert, and that will drive down the cost of operations largely.
So your bank is a public company, but what are the proceeds from this CP is going to be used for?
We've seen the opportunity generally in the SMEs and general commerce space, and that's what we intend to deploy the resources to. If you observe also, CBN has done largely well this year by providing in the FS market. So we've seen trade volume increasing largely, and we've seen some kind of transaction within this space that we intend to use this short-term finance, to drive, to take advantage of such identified opportunities in that space.
Now, a lot of people have actually thought that, and this is for the viewers, a lot of people had thought that the CBN MPC meeting was for 18th and 19th of next week, but it's now going to be 25th and 26th of the upper week. But I think it is worth the while if we'll take a look at what the next meeting will be looking at, given the state of the economy and what we've seen, the strengths of the macroeconomic variables that we're beginning to see in recent time. We've seen the second quarter GDP numbers ushering Nigeria out of recession. We've also seen the merchandise report, as well as the inflation report released by the NBS, all released by the NBS for the month of August. But Mr. Bakare, let's look at what the committee is likely to be focusing on, given the parameters that we've had from the last meeting.
Well, like I correctly said, we're out of recession, 0.55 growth in GDP for Q2. My expectations is that CBN have also been quite supportive by providing liquidity in the FS market. What that has done, it has brought stability in the exchange rates. And we also see confidence from foreign portfolio investors. Look at the numbers of traded volume in the I and E window, investors and exporters from FX window. It was in the last, within the last few months, up to about 6 billion. So in terms of exchange, people have done pretty well. But what they need to look at, they need to take a hard look on the interest rate. I think it's pretty high. It's whereby CBN is borrowing at likely close to about 23 effective yield. It's quite high. That will support growth in the economy. So my take, the next MPC, we expect CBN to call down on rates because they need to reflect the economy.
But analysts will disagree with you on this. Instead, analysts generally are looking at the committee consolidating on the gains of the foreign exchange that we've seen in recent times.
Yes, inflation is about 16, like right, 16.01. And if you are borrowing at 18, 19, that's the positive returns on investment.
If inflation is at 16.01%, and some people are saying that, in fact, by this month of September, it's going to begin to trend upwards again, then maybe the committee is probably not going to change the figure. They're going to retain the parameters at what they left them 2 months ago when they had the last.
Let me share something with you. At the last auction, which took place last Thursday, we had CBN cut down on the discount rate on the long-term T-bill by about 80 basis points, from 18.5 to about 17.75, thereabouts. You know, that's an indication where CBN is going. And for me, if you also look at, as we speak today, CBN also needs to support the fiscal stimulus that has been, being initiated by the federal government to reflect the economy. Borrowing at these rates at 23%, you are what they call crowding out effect.
Great.
Yeah, from the private sector. So CBN also needs to look at other items. For instance, I'll give an example. The CRR at 22.5 plus 35% to the 27.5 is pretty huge. As we speak today, about 9.4 trillion have been swallowed by central bank. And I'll tell you how. PME today about 3.6 trillion. Home auction about 5.8 trillion. Add it together, that's about 9.4 trillion out of the economy. If you look at bank deposit today, about 10 trillion of thereabout. Take 27.5% of that, about another 2.8 trillion out of the economy. So add it together, that's about over 12 trillion being swallowed by the central bank. So they need to release part of these funds into the economy to reflect the economy. Otherwise, to sustain these 0.5, for me, so that we look at it as a fluke.
Mr. Bakare, a lot of people will disagree with you and simply tell you that in fact, interest rate is becoming irrelevant as a monetary truth. But anyways, that's a discussion for another day. Thank you so much for making it to Capital Market this evening. Unfortunately, we don't have extra time to take up this discussion on the MPC. We appreciate you coming on the program, sir. Mr. Kayode Bakare is the treasurer at Wema Bank PLC.